17 area, because it's kind of where the market came out. There was a lot of consolidation. This would be a good price target area if you were a bull. Now, if you were buying the stock, obviously you could buy the stock for $1,250, but $195 on the call would probably be a better bullish play than the stock. Once again, the stock hasn't been out for very long. I'm not saying buying the stock wouldn't be a good long-term investment, but I think that if anything in this situation, once again, you don't want to catch a falling knife. There's no real signal, and there's no fundamentals driving any reason why you probably would be bullish. So buying the equity is not a good play. This doesn't mean that you wouldn't be able to catch a bounce or the stock can't go up. That's where the call comes into place. Now, if you're bearish, obviously there's still room to the downside with the put. Okay, so with this one, we had a $12.50 strike price put, which was at $2.20 or $2.20, which would have given you a nice little way to capture a downside move should the trend continue. Or if it's bouncing, which it looks like it may has a good chance to because of all the stocks we were looking at, this is the one that actually did catch a bounce. You are looking, you're looking at a nice little move. So let's get to some questions real quick. All right, so we're looking at short-term options only. We'll be discussing, I'm not sure, I think we'll take the moves we're looking for. Okay, so yes, the first question was about the moves. Yes, we were looking to catch short-term moves, especially because we're coming into the end of the year. So you have a lot of what happens now over the next 2 to 3 weeks. You have a rotation amongst fund managers. Okay, so if you have funds that are they're up on the quarter, they're up on the month, they're up on the year, they're looking to take profits on positions that they're up. So there's a good chance that you're going to have a lot of selling. Okay, for one. And then also you're going to have a lot of curtailing. You have a lot of new things where you have a lot of new funds that have come out, especially in the crypto space. All the companies we've looked at, except for Coinbase, have had a very short existence as being publicly traded and being regulated. So as that time grows and as they mature, more and more funds will be buying them. Also, more and more funds are now being set up where they are crypto exclusive. They can do that now because guess what? They have options. They actually get to use the options, which they do, and also have the stocks. So that's something where the markets that we looked at today, there's a very good probability that not just Coinbase, but every single one that we looked at, that the options markets is going to continue to grow in volume as well as the activity in those underlying stocks. What is a crypto stock? A crypto stock is a cryptocurrency industry stock. So anything that deals as far as being a crypto exchange or in crypto technology or in whatever has to do with crypto, that is a crypto stock. Kind of like you have like your staple stock, like Procter and Gamble and Johnson & Johnson. That's that sector. The crypto sector is the cryptocurrency sector. So they are not cryptocurrencies. These are companies, okay, but they deal in the crypto space. Let's see, in your Hut 8 mining example, how did you come up with the January expiration date? Once again, I was looking at these as being examples to trade the end of the year into the new year. We have, I mean, obviously, anyone that's been except in a coma the last year or two knows that we have incredible volatility in the markets. We have the markets on their highs. We have Bitcoin that had come off a nice new high. It seems to be comfortable at this 50,000 plus area, coming off the just under 70,000. And you have all these other cryptocurrencies also. Now, the Hut 8 mining example is because of that sector. Like when I looked at the different crypto companies that were available, I wanted to hit Coinbase because I knew people knew the name. Argo was one that people have heard. Like I said, it's really recently listed, but I wanted to look at the ones that were on lots of radars, that two were also involved where they had trackable already revenue streams and some other things that just gave them fundamentals. So today we've been talking about technicals. We're not teaching you buy signals and sell signals here. That would be a webinar in itself, for that kind of a thing. So we were just talking about what would be your scenarios and stuff like that. I wanted to give you company names and markets where there's opportunity, you know, where you can see that like Coinbase is much more expensive for your smaller time investor and trader to participate in versus say Hut 8 mining. Okay, so that's why we use the shorter expiration dates as well. Now there are things for longer term expiration. When you talk about longer term expiration dates, that gets into more sophisticated investing, and this is a more beginner webinar that sophisticated traders can gain from, as well as beginning traders. But to go into long-term expirations, a lot of times when you start to use a lot of longer term expirations, you start to deal with spreads and all kinds of layering of and legging in and out of options. These are techniques that you have to be able to be solid in your fundamentals before you even start to even think about doing those things. Let's see, some of these companies are primarily startups. I trust that they are found on the OTC exchange. Are these options available? Yeah, the options are available on the CBOE. So these are not like, there's a whole bunch of cryptocurrencies that are on the, crypto companies that are on the OTC and what have you. But I mean, Coinbase, that's a listed company. That's not in the pink sheet market or anything like that. And there are derivatives at the CBOE. It has a good volume and it has a good option chain also for especially Coinbase and some of those other higher priced options. So they're no different than trading Amazon or Tesla. It's just they don't cost as much, you know. So, and that's another way of trading the technology sector, because those are very expensive markets to trade as well. So let's see, we get to the next one. We still have time for a couple more questions here. Seems like the option prices for crypto companies are high compared to other industry options. This is going to be a two-part answer here. Let's see, my reason is most option prices are about 10%. That is true. Okay, so as far as, okay, so to paraphrase, we had a question here. It's about the cost of crypto options versus options in the other rest of the industry. Yes, in your thinner markets or more volatile markets, you're going to see a higher cost of pricing. But I would say that you're not going to see any difference in, say, Coinbase versus something like Tesla. You look at Tesla and Amazon versus other technology companies that are even the trend and have good volatility. They're not even remotely priced near what the levels that those options are. You know, I mean, I have to say, like, you know, having been in the business for a very long time, I do know some guys who are old ex-CBOE guys and still trade options, and most of them, in fact, I would say every single one of them makes the majority of their money writing options. So they're loving the excessive premiums that you're getting in, especially some of these stocks. But you have to have very deep pockets when you're writing these kinds of options, because there's a double-edged sword there. You're already looking at stocks that are so expensive in price that, depending, let's say it's even to the downside, if you have a 50% correction in Tesla and you've been selling calls, and I'll have a big load and you're loaded up on calls, you're looking at, on puts, you know, that you sold, you're going to get crushed in a big market slide, you know. So everything is relative. As far as the pricing, yes, you're going to see in the higher flyers like Coinbase a little bit higher premium. But remember, when we looked at some of those other ones, you know, as we get down to the cheaper, or the lower, not cheaper, but lower price stocks. And I gave you the example of how this is like trading a Coca-Cola. You know, the option pricing is not, and that's where you get your big bang for your buck. Some things are not on the radar. So there's only so much money allocated, or it'll say, hey, a crypto fund maybe like, we're trading options on Coinbase, but we're not touching the other ones. Well, if the other ones trend with Coinbase, just like Bitcoin is kind of like, I consider it the dollar index for the cryptocurrency market, if you will, to a degree, not wholly. That's a whole webinar in itself. But think of it like that, where the dollar index, the euro and the pound are the two biggest things. If those things move it's going to make those things move. It's the same thing as relative in these markets as well, especially when it comes to the options markets. Okay, let's see. We have, I think, time for two last other ones. Okay, I see you're basically eyeballing the candlesticks and not using any. Okay, yeah, this webinar is not about support, resistance, and buy and sell signals. We could do a webinar on, in fact, like my book, High Probable Japanese Candlestick Patterns would be a great one to use examples currently in the market with, when those patterns get triggered, what would be a good option play. You know, this webinar was about understanding, finding decent strike levels in the market or where the market's at, and then evaluating what would be a good bull and what would be a good bearish scenario. Remember how we looked at some examples and I'm like, okay, so if you're going to trade the options on this one, the bullish scenario is better than the bearish scenario. There's not much room for your risk that you're putting up. So unless you have a valid, real valid reason to sell into that market, or you have a sell signal that you're following and whatever, that's one reason to take that trade. Or you do the right thing, which is you walk away. You don't take the trade. You know, for instance, if you're bearish and there's not much room in the bearish trade and all the money is in the opposite end, you don't take the trade. You got to remember you don't just put on a position just because you want to put on a position, you know? So for these examples, I couldn't control where these markets were at. They were at where they were at. So I was just looking at a line in the sand. If you're bullish or if you're bearish, this is the cost, and this is how you could look at it as far as how can you manage it and what can you look forward to, you know? So, but yeah, as far as that's something that's on our list of topics is integrating, getting more into the actual, how you pull the trigger with the platform and stuff like that, entering the actual option trades, and also why you would do it. So, but today's lesson is not a webinar in support and resistance and technical analysis. But read my book, High Probable Japanese Candlestick Patterns. It's all in there. Let's see, would you ever sell puts on these stocks? Okay, now selling puts, remember, this was all about buying options. This will be our last question. Selling options is where you have unlimited risk. Well, except for if for instance, you sold, well, if there's unlimited upside for the equity or stock, you have unlimited risk. To the downside, you have only as far as the market could go. That would be your risk on selling options. But yeah, as far as selling puts, that's a naked position. That's for advanced traders. That is the same thing as being long, you know. So there's other ways of being long that I would suggest before you sell puts. And I'm not saying that selling puts is not a bad idea. I've sold options before, and like I just told you, I know people that do it. That's all they basically do. But you have to have deep pockets and be very sophisticated and watch what's going on. Okay, so that is that for that. So let me just turn this slide once again, give a plug before I turn it over to Gina. So if you get a chance, Forex Trading Unlocked on YouTube, subscribe and check out my channel. It's got all kinds of videos, and also about if you want reasons to buy and sell a market. They work in all kinds of markets. My patterns, High Probable Japanese Candlestick Patterns, available at Amazon.com in paperback and Kindle versions. And now I would like to turn the mic over to Gina, and thank you, eOption, and all of you guys for participating today.
Great. Thank you, Teddy. That was very interesting and informative, and lots of great questions. And thank you to all of our attendees today for taking the time out of your busy day to join us. And just a few reminders before we go. A recording of this webinar will be available tomorrow on our YouTube channel. So make sure you're subscribed so you don't miss any of our videos. And that's at youtube.com/eoption. And if you do go to YouTube, when it's published, we will have a special promotion there. So if you open an account, we will give you some free stock. So some free Bitcoin stock, actually. So we encourage you to go and check it out when it's available tomorrow. And just a few reminders about eOption. We do charge some of the lowest rates in the country. It's just 0 for unlimited stock and ETF trades. And options are just 10 cents per contract plus $1.99 per trade. And if you go to www.eoption.com, we have lots of great resources on there that are also free to help you with your option trading. And another great thing about eOption is we do offer a tool called Options Play. It's free if you open an account, and there's no minimum to open an account with us. And basically, it scans thousands of stocks each day that highlights potential option trade opportunities for you. And it's a very intuitive program. So we encourage you to check that out. And you can go to our website and learn more about that. And that's that. So thank you for attending today. We really do appreciate your time. Oh, and one more point. If you like the webinar today, Teddy Keckstad, our speaker, is going to be doing our next webinar as well. And it's called The Mechanics of a Basic Option Trade. And that'll be in the new year. So that'll be January 26th at 1 p.m. Central Time. So we encourage you to mark your calendars, and you can also sign up today and put that on your calendar. So we hope you'll join us. We do try to do at least one webinar a month. So we hope you'll be part of our series. And thank you again for your time. We greatly appreciate it. And we wish you a happy and safe holiday season and a very happy new year. Thanks again. Bye now.
Hello everyone, this is Teddy Keckset from Forex Trading Unlocked, and we are here with a Forex Trading for Beginners webinar for you. Before we get into it, we just want to remind you that this webinar is for illustrative and educational purposes only. Also, if you have not done so, please subscribe to our YouTube channel, Forex Trading Unlocked, and our Twitch channel also, Forex Trading Unlocked. And when you also get a chance, go to Amazon.com and check out the book High Probable Japanese Candlestick Patterns, written by yours truly, Teddy Keckstedt. It's available in paperback and Kindle versions. All right, so let's get into the meat and potatoes of Forex trading for beginning. So one of the best places to start is at forex-trading-unlock.com. That is our company website. This is our home page. On the home page, we always have, when we're streaming live, we have, which right now we are, you can see what is going on as it is occurring. Then we also post our weekly analysis also, so you can just go to our home page and get that information right away. As a little breakdown about us, if you haven't already downloaded the Ninjatrader Platform, I highly suggest that you use this. You can access it from any one of our pages. We have a Ninjatrader download tab. Also, from our tools, you can, from the navigation bar, click on the Ninjatrader platform or the multi-charts trading software platform. Great platforms to check out and use. Ninjatrader is free for all basic users for end-of-day data, and you can use it for Forex, futures, stocks, you name it. So, but for us, we prefer that you check out the Forex Trading Unlocked nav bar and go to the workstation page, because we have everything set up very convenient for you. From this page, you can start your day where you can check out our live streaming analysis. You can also then step and look at the calendar. You always want to be aware as a beginner, especially what is going on in the world as far as news events. The nice thing about our calendar is it's arranged on a daily basis and goes by the different countries. So you can see, like for instance here for the euro, you have the COVID-19 numbers. Then you have for Japan, you have large-scale retail sales yet coming out today. For New Zealand, you have this, and then you also have on the 31st, consumer confidence, blah, blah, blah. You can see how that goes. These are all brought to you by TradingView that we have access to on our website. The nice thing about using forex-trading-unlock.com is that you can see, as we're doing this live, there's not all kinds of pop-ups. You don't have all kinds of marketing ads and things like that that you would if you were to go to some of even these other sites like TradingView or what have you. So we try and keep it limited so that you can access this stuff from whether it be a cell phone or a tablet anywhere in the world, and you don't have to worry about logging into an account, and you can check analysis and get your news and actually do some functional things as well. So when you come down to this page, as you can see, we have it set up with the euro as our initial market. You can always change these at any time. Like here, we'll put in the US dollar JPY. As you can see, it then changes it, and it gives you all these other bits of information. We're going to go over that in just a second. So also you can pull up things like XAU USD, the gold. This is all live in action. The only thing that is delayed would be something, for instance, like CL1. Let's say you wanted to look at crude oil. Futures contracts are in delay. You can see that it says May 27th. So by law, you cannot have live futures data unless you're paying for it. So you can't broadcast live futures data. It has to be in delay. So that's the one thing that will be in delay on our website, but it is all free for everyone to use. And you can see how even from when you pull up these different markets, it gives you the curves, it gives you performance and how it's done on a weekly, yearly basis. It has other technicals as far as whether it's in buy, neutral, and stuff like that. So these are all very useful tools that you can use. All right, whoops, put the wrong symbol on. Euro, US dollar. Okay, so once again, we get back to here, and you can see on a Forex basis that it gives you the current market quotes. So this is all live in action. Gives you some basic numbers, some performance numbers, and also some technicals. You can click on more technicals, and this will give you it on a different breakdowns of, say, the monthly basis or the weekly basis. You can see how it changes, 15 minute, 1 minute, you know. So there's all kinds of ways that you can get information like that readily at your fingertips. For time frames, for the charts, you can use access to right here. You can go on the hourly right here really quickly. You can go to the 30-minute, gives you different time frames, really quick accessibility. You can see that as the euro was trading lower into today's session, once the U.S. markets opened, it did like a balloon underwater. It bounced everything right back. A lot of this could be because we're in front of a holiday market. It could be a lot of profit taking going on in the U.S. Right now, currently, all the other markets are closed globally. So now let's go to the daily right here, and you can see that the euro US dollar, which had probed new lows on the day, has had a nice bounce. The question is will this rally continue? I believe that at least going into the holiday market that you're probably going to see this trend continue going on into Tuesday, Wednesday morning. So remember that there is, markets are closed in the U.S. We click on this, make this a little bit bigger. You can see how easy it is to manipulate these charts. Like I said, as we're looking forward to do our analysis into the week to come, we're looking for this to make a higher move high off of this low. So why does he say that? Well, let's start with the very beginning thing that all Forex trading traders need to know, especially in the beginning, is you start with trend analysis. So as you can see here, the market bottomed out here in April. Just to make this a little clearer, we're going to go like this and go like this. All right, so this right here is where the market bottomed. See this little circle right here? So this set this major low right here. Going into that point, the market had been trending lower, as you can obviously see, and then once it hit this point, it started to rally. Now, of course, in the initial beginning stages of this, you don't know if the market is bullish or bearish on the short run, because the market's going up. That is bullish, obviously. Bulls go up, bears go down. So what you do see, though, is once a few sessions occurred, you keep on making higher move highs. Every little pullback becomes a higher move low, and then we continue to make higher move highs, come back down a little bit, make a higher move low, and then boom, we come. And the trend is that higher move highs and higher move lows. It gets a little clearer as we get closer into these areas here. So for here, we have a high, and then see how we can mark with the text really easily. We have a low, and as you can see with those highlights now, it should stick out to you where these are highs and lows in the marketplace. Now when you have higher move highs and higher move lows, that is a uptrend. Now if it was the opposite, where you were making lower move highs and lower move lows, like for instance here where we had a high, we had a low, lower move high, lower move low, lower move high, lower move low. That is a downtrend. This is an uptrend. So that's one of the key things for basic analysis for Forex traders that you want to key off of, is establishing your trend. If you know what the trend is, then you can look for trades. There are counter trend trades and there are trend trades. Typically, especially for beginners, you want to focus on trend trades. To trade counter trend trades takes much more experience. They have a lower probability of success. So how you manage your risk in counter trend trades and trend trades is different. These are things that you learn as you expand your knowledge. Right now, this is all about for beginners. What do you have to focus on and look at? Basic fundamentals. Once you have these things down and you incorporate that into your discipline, which is your outlook for markets, and whichever markets you approach, every time you approach them, you need to do these things. If you skip over these steps, you are already setting yourself up for failure. So the very first thing for Forex traders, for beginning Forex traders, is to remember to acknowledge what the trend is. Now, this is a daily chart. So daily charts have a little less noise than, for instance, if you go down to, say, the hourly. See, the hourly all of a sudden is broken down. It's in much tighter ranges. There's a lot more noise going on. There's news events that come out. There's things that happen during the day that cause all kinds of gyrations where the market, for instance, here sells off real quick, but then it buys itself back up and comes back up here and starts to chop around. Then we get to a point here where in front of, like, say, the U.S. market opening, the market totally tanks. U.S. market opens, reverses gears in a big way. Does that mean that every time a market opens, that's what happens? Absolutely not. However, today the news was what it was. The whole world is settling down into the end of the week as the U.S. Is the anchor man for the Friday trade. So, and that's probably what's going on right here, is that you have a Friday rally going on because the other markets are closed. Now, if you go down to the 30-minute, you can even see even more gyrations. You know, it gets tighter and tighter and tighter. There's a lot more going on. 15-minute chart, look at this. This looks like there's a lot of activity. What you have to take into account, though, is look at the range. Like, for instance, these trading bars here, like if we look at this one right here, let me put the arrow so you can tell which one I'm talking about. Look at this green bar here. The low of that day, or of that bar, is $1.2166. You can see the low is this number right here, L. I have this bar highlighted. The low is $1.2166. The high is $1.2187. So that's only a 26 pip range. That's not a lot of market action. When you take a look at the daily basis, those bars are much more significant. So like today, the low is $1.2132 and the high is $1.2201. That's a 73 tick, or excuse me, a 67 tick range. So that's where you have to look at the differences. The scalability of the time frame has a lot to do with what's going on with these markets. So always be aware of your time frame and be aware of your trend as a beginning Forex trader. So these are the first dynamics that you want to learn, and then once you start to get those in a grip on those things, that's when you start to incorporate signals. Trading signals is a totally different thing to work with. The first thing you need to understand is market direction, what's going on. So trend dynamics, usually the best way to start is to identify a major swing low or a major swing high, and then identify the highs and lows and figure out whether or not they are consistently making higher move highs and higher move lows, or if they're making lower move highs and lower move lows. Another thing to do once you have established that is when you find your lows, for instance here, you can connect them and you find the support. Now today is a good indication of where the market opened up. It was riding this upward sloping support and boom, it tanked, came all the way down and then shot back up, and now it's positive on the day. So does that mean that support has failed? Not necessarily. There was a big extreme test of support and the market snapped back. However, it does show that the market was trying to establish what? A higher move low. After all, here is a high. Okay, so here was our higher move low here, and then here we have our higher move high up here, and now we're looking for the next higher move low. And that's when you start to figure out, is it going to be a new buy signal, or is it just the a place where the market starts to establish a intermediate churning trade. Remember that markets do digest. They don't just go from a low and then start making highs. They sometimes start to settle into a sideways pattern. So you never know about that, when that is going to occur. There are indicators you can use that sometimes help. Remember now, when it comes to indicators, there are so many different types of indicators. You can go indicator nuts. As a beginning Forex trader, I would suggest that if you're going to use indicators, you stick with something very basic. One of them would be a stochastic. Okay, so the stochastic here is an overbought, oversold indicator. As you can see here, when it's in this lower range here, that's when it starts to come into a buying zone. Now, when it gets into the upper part here, that's when you're looking for a selling indicator. Now the thing about these is about indicators themselves is a lot of them are lagging, meaning that the market will turn beforehand. As you can see here, the market had been trending lower for a while. Like if you look at here, it started, this indicator was already trending in the oversold territory. Everything down here is oversold, everything to the top is overbought. So had you started to look to buy when this indicator started to be in the oversold territory, you would have bought into this area and then you would have been losing money. Okay, so you have to be mindful of indicators. They're very lagging. They do help. Usually what you want is you want to have more than one indicator lining up to give you an idea of what is going on. So if you do that, then that changes the whole dichotomy of what's going on with your analysis then, because then you can start to use it where it becomes very functional. Okay, and that's one of the key things that you want to do when it comes to your analysis. So first we identified the low, then we identified the higher move highs and higher move lows, confirming that we have a bull trend. Now as you can see is that since we knew we were in a bull trend, your indicator here tried to have a little sell signal. When these lines cross, that's when they start to indicate that the market is selling off. Now if you would have used this first cross over here, just like if you would have used this first buy over here, you would have been losing money. So the key is, when do you know that this is not going to really be this and actually sell off, or when this is this, when it does sell off? Well, there's lots of different ways to figure that out. Now, just like here, as we're making this higher move high here that we had just made recently, you can see now we sold off for the last couple of days. It's starting to grind here, and it looks like, oh, the indicator is looking like the market wants to sell off. Could be, maybe not. Remember that since we're in a bull market, we've been making higher move lows. So as the market sells off, it doesn't sell off very much before it returns to the trend. And that's why you got to remember when you're, like for instance in this case, where we're in an uptrend and we're using an indicator, when it starts to say it's overbought and it's ready to sell off, remember that's a counter trend trade. Now for instance here, where we knew the trend was up, and here we had this crossover right here, see where this low is here, and this cross and started to go back to overbought. That was a fairly decent buy signal because you're in a trend trade. This cross goes in the direction of the trend. And then as you can see, the market made another rally and exploded to the upside. So it'll be interesting to see if you can, if you're catching on here as we add this next indicator and see where we're going with this one. So now one of the keys to knowing the market direction, like I said, is using these indicators. Now let's use a combination here. So we're going to pull up another really popular indicator, the relative strength index. So now we have the stochastic, which is the first indicator here, and then we have the relative strength index. Now notice this one. You have your oversold indicator layers down here near the bottom, and you have your overbought indicators here towards the top. Now see how when we had this low here, this crossed here, this was on the bottom, they both kind of worked together, and then here they did the same. Okay, now this one doesn't have any crossovers, but when you line these up together, they do give you some short-term buy points. Now this one did work for a couple of sessions, it just didn't hold out for a very long time. So initial corrections, and that was also, think about this was a bear trend. So when you had this crossover, it only lasted for a couple sessions. That's a corrective move. It was a counter trend. So counter trend moves don't give you these big long crossovers here for these indicators. So in a bear market, you would expect the initial crosses usually to be a corrective trade. Should they be that, that's when they become this stuff here, and then you know that it was only that. When they start to go like this, then you know that it is more than a corrective trade. Like this is where there was a trend reversal. Okay, so with this one, you can see this was in the oversold territory, this was in the oversold territory, and then we get this big rally here with this. Now as you can see here, see where this crossed here? This was already in the overbought territory in a big way, and then the lines crossed for a sell. Well, this trend kept on continuing higher. But look at the relative strength. If you notice this one, yeah, it was heading towards oversold, overbought, but it hadn't turned yet. This one was turning, and this one was stabilizing. This one here, when it went sideways, it did start to move down a little bit, but it didn't matter because the trend itself had been going higher and higher every day. So that's when you know it's most likely digesting, or the momentum is so strong that these indicators are always lagging, that the numbers start to skew in the overbought or oversold area. That's why you need to incorporate other techniques to know when you do your initial entry for buys and sells. So now here, this one here is another one where it crosses. This starts to get in the middle. It gets really tough to read these indicators. So these are things when the market is trending on major extremes, you can use these to help give you an idea of when the market turns. But remember that there's a lot of noise to filter out where they can also continue the trend, and these just don't give you any valid signals. These will try and point you in the direction of another direction, excuse me, when the market is actually continuing either to the upside or the downside. So let's get rid of this. Let's make this chart a little clearer. So once again, we see that indicators are very lagging. Okay, so now when they line up together, they do help to give you an idea of buy and sell signals. However, they are always in the lag. Now, I always say that the best indicator of the market is the market itself. Now, at the beginning of this webinar, I told you about a book, High Probable Japanese Candlestick Patterns, which, by the way, if you want to access our products, courses, and services here on forex-trading-unlocked.com, you come down on this part of the tab. It says High Probable Japanese Candlestick Patterns. That will teach you, give you access to a little bit of the book. You can see how the writing style is, and you can get more information about it. And in that book, we highlight how to trade these signals. So wait, let's make this a little clearer here. Let's make a different arrow. Okay, so this little red bar right here, just below the high. Okay, the previous day it made a high, then we have this sell-off. This is called a bearish, and bearish always means lower, engulfing line sell signal. Oops, not engulfing line. Okay, so what is a bearish engulfing line sell signal? It's a high probable Japanese candlestick patterns, and it happens to be one of the most popular and highest value as far as being a good signal. It's probably one of the, I would say, besides being in the top 10, it's probably more in the top 3 as well. They are very significant. They work in all markets. Now, time frames is a big thing you need to be concerned about. You learn which time frames to use these in the book, High Probable Japanese Candlestick Patterns. And just because they occur doesn't mean that they are a signal. You have to know when to exercise these. So let's give you a little clue and a heads up on how to do so. So right here we had this sell signal, and as you can see from once this day was over, and what this is a down day. See how this is red? When we're trending up, these are green bars. The down days are the red bars. So bearish engulfing line is a down day. Okay, so bearish down, bullish up. It would be the opposite if it was a bullish engulfing line. So what is a bearish engulfing line? Well, if you take a look, it didn't make a higher move high on the day, but this body, the colored part of the body, when you see it red like this, that means this is the opening, this area here. This is where it closed. Conversely, on an up day where it's green, you can see that that's where it opened. The market traded a little lower. That's the little candle wick there. And then it settled up here, and the candle wick there shows you the high of the day, but that's where it closed. So on this particular day, the market had opened, had traded a little higher after it had opened, then it traded lower all day long, made a low of the day, and then settled just above it. So that would be your bearish engulfing line, because this body, this candle body, not the wicks, the body, it encompassed the whole trading range of the day before. So if it encompasses the whole range plus a little bit more, then that sets it up to become what is called the bearish engulfing line. Okay, so now this is a great sell signal that we like to use in all market time frames. Now the question is, how far does it go down? So this is a daily chart, so you would have a daily projection for a downside target. Now this is a beginning Forex traders lesson. We are not going to get into the actuating of these signals. That's a whole lesson in itself. Like I said, check out the book, High Probable Japanese Candlestick Patterns. You can access it through the navigation bar on our website or from Amazon.com. And that gives you full instructions on how to trade that particular signal as well as other signals. So, but this is something that I want you to know as a basic Forex trader before you start pulling the trigger is you need to know these kinds of analysis. So remember we were talking about indicators. So why am I using this one? Well, this is an actual signal. So now let's go back to our indicators. All right, so let's pull up the stochastic. And remember, when these lines cross, that's when you're looking for a buy or a sell signal. Now, interestingly enough, and we'll put a vertical line here. So this day, that's the wrong color to use, though. Let's use, not green. Okay. So as you can see, we have the bearish engulfing line, this red day. This line here shows you where this indicator is. Now, when we had this crossover here, there was no sell signal. We had the indicator indicating that it was overbought and ready to sell off, but the trend kept on going. Once again, we finally had a crossover. This is a big down day. It's not a bearish engulfing line. This is a sell pattern here, but it's a very minor sell signal. It did line up with this cross, but still not a very valid one. Now, when we use something like a bearish engulfing line, oops, we can spell this correctly. Sorry about that, folks. The bearish engulfing line, we know that at that point, if the market has obviously been railing into a bearish engulfing line. A bearish engulfing line is when you have a reversal to the downside. It is a very valid signal. Does it fail? All signals fail every once in a while. This one, on an average, though, is very successful, at least in the short run, to even the intermediate term where it does hit its initial target signals, downside targets in this case. So, since we have a signal and we have an indicator that was already showing us that it was overbought, and then it crosses, that makes us very, very sure of ourselves that a short-term corrective trade is developing or has developed. Okay, so now you would look to see the market travel down to an expected target area. Finding targets and things like that off of trading signals is a whole nother webinar in itself, but right now we are showing you how in the beginning as a Forex trader you need to encompass these things and also understand how they work and are interrelated. There are lots of instructors out there that will say, hey, set the stochastics to this number and filter it. We didn't even filter the variables of how these lines work. You can skew these where they don't have as many crossovers, where you filter it, you optimize it basically, and you can optimize any indicator all you want, which is good because certain markets you have to fine tune them because they behave differently than other markets. Every market has its own nuances. So just as we can see here from the stochastics where they cross over, and then with this signal, boom, this is the one that is valid. So because this one here, we didn't have a signal, we just had an indicator giving us a reason. Now let's also pull up something else. We'll go back to our relative strength index. This one here was in the middle, and this one wasn't really giving us any reason. So this is a thing where, see, if we were just relying on the two indicators, we would have one that gives us a sell, one that's in the medium chop zone that really would say, do we take this trade or do we not take this trade? This would give us no information. It would be a mixed bag of goods. But with this indicator lining up with this sell signal, that gives us a confirmation that yes, we are looking for a short-term turn in the market for a corrective move that would target, certain levels. Now, no matter what, this doesn't mean that we are looking for the market to become a big bear and all of a sudden it's doom and gloom and the market has turned. Remember, we're not trying to pick a top, and we never want to try and pick a top or a bottom anyhow. This would be just a time where the market had been railing. It gives you a setup for a very good, low risk, high probability sell trade. Conversely, this could be done also to the as a buy trade as well, for a bullish engulfing line. So this is a very simple way of incorporating your trend dynamics, which no matter what is number one. So your indicator here, this is one of the last things that you look for. These things you can definitely use, and I do highly suggest that as a beginner you use them. But remember, there's a lot of noise that can be happening. And another thing is, be careful of smaller time frames. If you think that this is hard to read and hard to digest and figure out, this is on a daily basis. The daily, the weekly, the monthly, they're not as hard to read as if you start getting into, say, the shorter time frames like an hourly or a half-hour chart or a 15-minute chart. There's a lot to filter out. There's a lot of unnecessary noise, and I highly suggest as a Forex trading beginner that you stay away from such types of time frames. Trade the longer term. It's like this. Think of it as if you know people who are big gamblers, they have all these parlays and this and this and that, and they're like, oh, if I would have just done this, or if this just hit, I would have gotten paid. Well, those are all gamblers. They're all would have, could have, shouldas. They're good, rich quickers, looking for the quick kill. That does not happen. Okay, over time, you're going to get buried doing that. However, if you wait for the market to come to you, wait for very good, valid trade setups, definitely use very good discipline in your risk management, then you put the odds in your favor. And then when you incorporate having very high probable sell signals and buy signals on top of that with good money management and trade selection, and then you start to open the doors to where you can become a successful Forex trader, or any trader of any market for that matter. So that is something that you want to always have in your forefront, because trading is not gambling. So let's get rid of these two things here. So once again, trend dynamics. Always know whether the market is going up or whether the market is going down. When you have higher move highs and higher move lows, that's when you're looking for, in this case, you'll be looking for a sell signal as you make higher move highs, which we did here, and it became a bearish engulfing line. Now,